More than just business news, we're news for business people.
Good morning, you're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Let's see how the Asian markets are panning out in trade. Most of the Asian markets are trading with a negative bias but have managed to recover from the lows of the day. Now, the SGX Nifty is indicating a 60-point downtick. But remember, we were down almost 133 points on Friday and we were shut in trade. So the SGX Nifty was down 133 points. So with a gap up of 60 points, expect, the trade to be, expect us to open with a gap down of close to almost 70 points from Thursday's closing. So expect a weak opening that will happen for us. Most of the ADRs managed to hold on to trade. Infosys was up 1.5%. HDFC Bank, ICICI and Wipro also managed to hold on in trade. So most of the ADRs did well. Vedanta and Tata Motors were the only two one that was slightly weak in trade. Now, how is crude panning out in trade? Over the past 2 days, crude has managed to recover significantly. Over the 3 days earlier, there was heavy selling that was there. Again, you're seeing up close to 0.5%. So WTI inching close to the $62 barrel per mark, and Brent now inching close to the $65 barrel per mark. So crude seems to be doing decent. Not the best close as far as LME is concerned. Let's take a look. Aluminium was up and lead was up in trade. Apart from it, there was selling that was seen in zinc, which was down 1.5%. Tin was down 0.8%. So weakness was seen as far as most of the LME metals were concerned. Now, how is China opened? Rubber is the only one that has opened with a positive bias, but apart from it, zinc, aluminium and steel, all of them are trading with cuts in excess of 0.5% currently. Precious metals seem to be doing well. All of them have opened gap up with a positive bias. So gold, silver, palladium and platinum, all of them seem to be trading with a positive bias. Now, it's the first day of the new month. FIs bought into 40 crores. DIs were marginal sellers in the market, so nothing much happening. But the Nifty was weak in trade. It ended down. The mid caps and the small caps were down in trade. The mid caps saw much more selling, close to 0.8%. The small cap was down almost 0.2%, so negligible amount of selling happening. PSU banks and the Nifty media were the two indices that were trading with a negative bias. As far as the Nifty was concerned, Nifty was down 35 points. What contributed positively? IndusInd Bank, HDFC and Kotak Mahindra Bank. BPCL contributed, but ICICI Bank and Infosys were the main contributors. Almost 1/3 of the losses came in just on account of ICICI Bank. So weak closing on the Nifty. Now, how are the F&O trends shaping up in trade? As pointed out, the SGX Nifty is indicating a gap down opening. You can see a 55-point uptick, but in short, it will be anywhere between a 70 to 80-point gap down opening in trade. Now, what are we seeing as far as the Nifty is concerned? Nifty on Thursday saw fresh shorts. Open interest build-up was 6%. It's trading at a discount, so there is heavy selling that is happening. The Nifty Bank is trading at a premium though, but there was long unwinding that was seen. Open interest was down 2%. Now, how is the Nifty panned out in shape? So basically what is happening is that call writers are active from 10,500 to higher levels. This is the resistance, 10,400, and the SGX Nifty is indicating a gap down. So we will breach below the 10,400 mark in trade. So these people, put writers who have positions at 10,400, will be forced to cut their position. So you could see a much more downtick that will happen. Now, if you see where the change was happening, you can see call writers were much more active at 10,400, 500, and at higher levels they're writing because they just want to take the premium. But look at the red screen, which are the put writer. They are shedding positions in open interest or hardly any kind of open interest build up. So put writers will be under tremendous pressure again to cut positions at 10,400 and 10,300 in trade today, given on opening. Now, PCR has moved down significantly. The Nifty PCR actually has moved down to 1.28 from 1.37. The Nifty Bank PCR has managed to hold on to those level only. So there is selling that is happening on the Nifty. Now, in the F&O band, there is Fortis Health, HDIL, and Fortis will be in focus because this is the last series of Fortis. It will come out of the F&O. So HDIL is the new entrant in the F&O band. The other stocks that will be in focus is IDBI, OBC are still in the F&O band, and there's one more stock that is in the HDIL is the new entrant in the F&O band, and JP Associate goes out of the F&O band. Stock specific, which are the stocks that you need to watch out for? The first one will be IDBI, fresh buying on open interest build up of 30%. Canara Bank was in focus. Open interest build up was decent at almost 3%, but fresh short short positions were taken on the counter. The other counter is SAIL, which saw fresh shorts on open interest build up of 8%. Dalmia Bharat was in focus. That saw BPCL saw short covering. Open interest was down 11%. Counter was down 3%. One of the big gainers. You had Aurobindo Pharma, which saw short covering. Open interest was down 0.5%. The counter was up almost 1%. And Reliance Infra and Reliance Capital, the two ADAG stocks, saw a significant amount of weakness in trade. Reliance Capital was also down 3% in trade. So ADAG looks rather weak in trade currently.
Stock of today is Fortis Healthcare. Well, DNA reports suggest that TPG Capital-backed Manipal Health is set to buy Fortis Healthcare for a sum of around 6,500 crore. Now, remember, the market capitalization of this company is around 8,300 crore, and the enterprise value is over 9,000 odd crore. So, the deal is expected to be at a significant discount of what the enterprise value is. The deal is expected to be announced and formalized anytime within this week, according to DNA. And the other bidders in fray for this company include Abu Dhabi-based VPS Healthcare along with IHH of Malaysia. Manipal is likely to manage the hospital chain, while you will have TPG, which is already invested in Manipal, acquiring the network of Fortis. TPG now has been looking to consolidate, or rather merge, the two entities for over a year now, and these two entities combined together will have an edge over Apollo, which has bets of over 10,000 right now. If you look at the key shareholding matrix for this company, the founder shareholding or the promoter shareholding has gone down to an all-time low level of 0.77% as compared to 3% that we've seen in the previous week. Also, R.K. Damani has bought in 0.5% stake in this counter, interestingly, some time back. Just to give you a rundown about what's going on with the company, the earnings have been under the pressure. However, the outlook, the guidance seems to be better for this company. Auditors, while announcing their Q3 numbers along with a previous set of quarterly earnings, said that they have not been able to obtain sufficient evidences relating to certain matters. Now, the promoters of this company, that's the Singh brothers, have been accused of siphoning off $78 million from the company, and an external agency in the previous week has been hired to to conduct an investigation against whatever is happening around the company. Most of the brokerages have a bullish call on this counter, irrespective of what has been going around, given the kind of valuations that the company is enjoying right now. With that, let's toss it over to Jayesh for commodity and currency market updates.
Thanks for that, Nikki. Let me start off with oil prices. So currently in Asian hours, we are seeing both Brent and WTI trade with a mild positive bias by about 0.5% for each of them. Now, this is on the back of falling after about 3.6% for last week. Now, what has led to the uptick in prices is the stoppage of production from biggest Libyan oil field that has actually stopped production. So that has led to the positive bias for crude oil prices. Now, as far as base metals are concerned, the index itself fell for about 4 days in a row on London Metal Exchange. Now, as far as individual base metals are concerned, aluminium posted weekly gains as Trump vows tariffs on steel and aluminium. Zinc was down about 1.5%. That was the top loser in trade. Copper and nickel ended marginally lower, while we had aluminium and lead, which gained on the London Metal Exchange. Now, most of these base metals are trading with a negative bias on Shanghai Futures Exchange in early Asian hours. Moving on to precious metal space, gold has actually seen some resumption in the uptick that we are seeing. So COMEX gold is currently trading near the 1330 mark and is trading about higher for a second straight day. Now, this is on account of the dollar index, which has ended lower for 3 days in a row. Staying with the dollar index, Saloni Dhanuka is here to give us an update on the currency markets.
Thanks for that, Jayesh. So, talking about rupee, despite strong macroeconomic data last week, it ended steady at 65.17 levels against the dollar on Thursday, amid growing concerns of faster than expected Fed rate hikes in this financial year. For the week, the home currency depreciated by a good 44 paise against the dollar. Remember, it has depreciated by 160 paise or 2.5% last month. It's the most since August 2015. Well, moving on to debt market. sovereign bonds capped their 7-monthly decline last month, the longest losing stretch in at least 2 decades, as yields on the 10-year benchmark security climbed 30 basis points to 7.74%. On the global front, the Japanese yen climbed to near 2-year high as investors shifted to safe haven currencies after US President Trump escalated talk of a trade war by imposing tariffs on steel and aluminium prices. The Japanese currency was also supported by comments by the Bank of Japan governor on easing monetary policy starting FY20 if they meet their inflation target of 2% in this financial year. Well, lastly, speaking of dollar index, it trades low for the third consecutive session today, well below the crucial 90 mark. And lastly, coming back home, dollar rupee is trading at 65.21 levels against the dollar in the non-deliverable forward market, which indicates a flat to weak opening for Indian rupee in today's trade.
Well, among stocks that we're tracking in trade today includes Hero MotoCorp, which has reported its auto monthly sales for February, where the sales grew by 20%. Sales for TVS Motors, however, grew by a much stronger 37% in February. So we'll be keeping an eye out on all those names. That apart, the board of Thomas Cook India has approved exploring restructuring of group companies. So also watch out for Quest Corp as well as Thomas Cook. You have NMDC, which has cut the prices of lump iron ores by about 3.2% and iron ore fines by 3.6%. So let's see how NMDC reacts in trade. That apart, what we're watching out for is Wipro on the back of acquisition of 33% stake in US-based Denim Group for $8.8 million. So that's close to 55 to 60 crore rupees, the small acquisition for them. Laurus Labs has said that US FDA has completed inspection at its Unit 2 with 0 observations, and they've also received their first approval from the US FDA for a HIV treatment drug. So watch out for that name in trade. That apart, Healthcare Global Enterprises has said that they will buy a cancer care hospital from the promoter for 52 crores. We're watching out for that one. Dilip Bilcon is yet another one. This has been a news of late for being the lowest bidder in many projects, but they have received letter of award this time for 2 new hybrid annuity projects from NHAI worth 4,400 crores. So you could see some positive momentum on that counter. And lastly, we're also watching out for KPIT Tech. Now, this is on the back of Mint reports, which says that KKR's arm has given 425 crores in structured credit to the promoters to be able to finance the open offer.
Okay, Aurobindo Pharma will be in focus over the weekend. It came to know that the US FDA has given 9 observations to their Unit 4. So that is something that is important. Now, basically, it is a sterile injectable unit, which is very important. And the inspection was from 12th to 20th of the month. Now, in terms of what does this mean for Aurobindo Pharma? First of all, let's take a look at the 9 observation. Majority of the observation relate to cleaning, deficient system in terms of maintaining the equipment. So equipment related, a lot of observations that relate to the equipment cleaning. The second one is also equipment and utensils not clean, maintained and sanitized. The third one is also relating to equipment is not of appropriate design. The fourth observation that they talk about is building is not free of infestation. They found a mosquito inside the sterile injectable unit. Procedure for cleaning and maintaining equipment is not deficient. So 5 of them are basically 4 out of the 5 are relating to equipment. The 6th one talks about employees lack training. That is very general. Apart from it, the 7th one talks about quality control. Actually, in terms of the acceptance and rejection ratio is not appropriate. The 8th one actually talks about laboratory controls not followed and documented in terms of documentation. And the final one that they talk about is in terms of computer access, appropriate control over computers not maintained. Now, these are all non-serious. There are no data integrity issues. But the point that we are dealing with a sterile injectable unit for which, or the US FDA will be very stringent, and equipment issues will be big for them. Now, what does this mean? No data integrity issues found. Procedural, but they're serious as far as the injectable plant is concerned. They would be procedural for a non-injectable plant. There is strong criticism of the sterile capabilities of the company, and finally response to in the 9th observation is very critical. Now, financially there will be no impact on Aurobindo Pharma given the fact that sales will continue, but there is a minor chance of this getting escalated into a warning letter if Aurobindo Pharma does not respond properly. And the reason that we are saying is that buyer got a warning letter for a similar amount of observation and a similar type of observation in which they were not able to respond properly. But But Aurobindo, in most cases, Aurobindo will be able to get through because there are no data integrity issue. But since it's a sterile manufacturing unit, it all depends on the FDA now.
Following the Department of Commerce suggestion on a Section 232 investigation, President Trump has hinted that it plans to impose a tariff across the board on steel as well as aluminum imports. It proposes a 25% tariff on steel imports and a 10% tariff on aluminum exports. This is based on Trump is expected to sign a formal deal for this anytime soon within the week. And if you look at the steel exports to US chart particularly, you would see that the maximum incremental share of exports to US is coming from the nations like Canada, Brazil and Korea, which account for 17, 14 and 10% of your overall exports. China and India, on the other hand, relatively have a small exposure to US at 2% each. Going by that, HSBC in its notes has said that India accounts barely for 2% of steel imports for US, which means that the direct impact of this development seems to be minimal for the country right now. The measure is expected to be positive for US-based mills, but obviously is negative for the other exporting nations. Having said that, we would see some kind of rerouting happening for exports, given the now that the incremental capacities will have to find additional markets and which have to be absorbed by additional markets, which also mean that one could see pricing pressure coming in. Going by that, even if we see a 1% drop coming in the steel prices, HSBC has actually done a sensitivity analysis where a 1% drop in steel prices could lead to a contraction between 2 to 10% for steel players. If you look at the chart here, you would understand Tata Steel and JSW FY19 EBITDA is expected to contract by as much as 5% each, with a 1% drop in domestic steel prices, whereas the drop seems to be, the contraction seems to be major for sale at 10%, and that of JSPL stands at 2.3% as per the research. Morgan Stanley also reiterates pretty much the similar view. However, it's put in a point where it said that Hindalco downstream operation Novelis could actually see some impact coming in with this development, given that it procures its aluminum requirements locally, and this is expected to have some kind of bearing in its input pressure cost. However, it says that it doesn't see much of imports coming in to India, given that the safeguard measures are in place. Having said that, even the strong growth that we've seen in the domestic steel demand could actually absorb the incremental domestic supply that we're seeing right now.
Well, on to some more stocks to watch based on the delivery buying and selling as of Thursday's close. The first stock on your list should be Dalmia Bharat. That was up about 4.5% in trade and saw delivery buying of nearly 200 crores. The delivery volume surged nearly 3 times at about 7.1 lakh shares as compared to its 5-day average, and the total volume jumped more than 3 times at nearly 10 lakh shares as compared to its 5-day average. Second stock to watch out for would be Cholamandalam Investment. That was actually down about 1.5% on Thursday and saw delivery selling of nearly 280 crores. The delivery volume jumped 171% and the total volume also jumped about 174%. The last and final stock to watch out for, Colgate, that was actually up about 1.5% in trade and saw delivery buying of nearly 110 crores, and the delivery volume surged about 250% and the total volume also jumped about 176%.
Xi Jinping is the most powerful Chinese president in decades, and he has many faces. Tough guy Xi cracks down on corruption. Statesman Xi fights for free trade. Nationalist Xi reclaims land in the South China Sea. And visionary Xi aims to make China a great global power. Here's how a boy who was sent to the countryside to shovel sewage and feed pigs reached the pinnacle of power. Xi was born in Beijing in 1953. His father, Xi Zhongxun, was a communist revolutionary leader and China's propaganda chief who rose to become a vice premier before being purged in Mao Zedong's Cultural Revolution. At the age of 15, Xi too was affected by the Cultural Revolution. He was sent to a rural village in northwestern China where he lived in a cave house dug into a hillside.
He was feeding pigs, he was like cleaning, kind of toilets. He was doing farming. You know, in his spare time, he would read books.
That's Bloomberg senior government reporter Ting She.
I covered China's politics and foreign relations.
While living in the countryside, he became a voracious reader, picking up everything from Victor Hugo to Ernest Hemingway.
He took one of his all-time favorite books with him. That is Karl Marx's magnum opus, Das Kapital. He read it 3 times over 7 years.
In 1975, Xi was allowed to return to Beijing, where he studied chemical engineering, but his work as a Communist Party member prevailed. Xi rose through the party ranks in the rapidly industrialized coastal provinces of Fujian and Zhejiang. His big break came in 2007 with his promotion to top leader of Shanghai. The job aided Xi's ascension to the party's all-powerful standing committee, setting him up to succeed Hu Jintao as party leader, commander-in-chief, and president. By 2013, the transformation was complete. Xi was China's paramount leader.
There was nothing obvious in the early part of his career to suggest he would become one of China's most powerful leaders ever.
Having taken power, Xi has demonstrated his flair for hands-on management and strict Communist Party discipline. He's launched a Mao-style campaign to tighten up controls on ideology, media, and dissent by arresting journalists and activists.
And he has been overseeing probably the harshest crackdown on activism and human rights groups in the party's recent history.
In addition, Xi has pledged a blizzard of economic reforms and ordered the biggest military overhaul since the 1950s.
He has this great belief China totally deserves to restore its place in the world. Chinese dream is the phrase he coined to conveying this message.
While Xi is seen as an able leader at home, he's only starting to establish China's new power on the world stage. And President Donald Trump has accused Xi of failing to curb the nuclear ambitions of North Korea.
So far, he doesn't seem to be able to give up on North Korea because the fear about the collapse of North Korea and the consequences of that.
But Xi is the first Chinese president not to visit North Korea and has argued China isn't responsible for them. And despite their disagreements over North Korea and trade, Xi and US President Donald Trump hit it off.
When he was in Mar-a-Lago on his first visit to the US, he seems to be totally in his element. He was telling Trump about the history of the Korean Peninsula, and Trump was rolling out his grandchildren to sing a Chinese song for Xi Jinping.
Just how long their warm rapport will last remains to be seen. Back home, Xi looks to set to rule for the foreseeable future as the Communist Party moves to end presidential term limits. The questions now are, will he use the power to force through reforms needed to revamp the economy? And will China emerge to rival the US as the world's #1 superpower?
Well, from international politics to updates in India with regard to the elections, the ruling BJP made further inroads into the northeastern part of the country after completing a historic sweep in Tripura, a state where 49 out of 50 candidates lost their security deposits in 2013. The party ended a 25-year communist rule by bagging 43 seats in the 60-member assembly, thwarting Chief Minister Manik Sarkar's attempt at a record 5th term in office. State Party Chief Biplab Deb is said to be the front-runner for the chief ministerial post. The BJP also emerged as the second largest party in the neighbouring state of Nagaland, bagging 27 of the available 60 seats, putting it in a comfortable position to form the government with its alliance partner NDPP. However, Chief Minister and NPF leader TRZ Lang has refused to resign, saying he will meet BJP President Amit Shah to discuss the formation of the government. The BJP and NPF could not sign an alliance earlier due to disagreements over seat sharing. Nagaland Governor P.B. Acharya has asked NDPP leader Nephew Rio to submit signatures of the 32 MLAs he claims to have the support of. Lastly, Meghalaya threw up a fractured mandate, with the Congress emerging as the single largest party with 21 seats. However, NPP President Conrad Sangma met Governor Ganga Prasad and staked claim to form the government with the support of 34 MLAs in the 60-member assembly. While the Congress failed to open its account in Nagaland and Tripura, the BJP managed only 2 seats in Meghalaya. Now, we've taken through what you can expect with regard to the markets today, and you'll find all the live market action right here on Bloomberg Quint Live. But there are also several stories that you should read on the website, bloombergquint.com. Here are just a couple of them. A special court on Saturday issued non-bailable warrants against billionaire jeweler Nirav Modi and Mehul Choksi of Gitanjali Gems in the 12,700 crore rupee Punjab National Bank fraud case. The two are believed to have left the country before the cases were registered. Now, proxy advisory firm IIAS is questioning the fact that ONGC has sought exemption from taking shareholders' approval to acquire the government stake in HPCL. Well, that's all you need to know going into trade today, and you'll find more updates on the website bloombergquint.com. But up next on Bloomberg Quint Live is Indian Open, and that will take you through Market Open. Thanks so much for watching. This is Bloomberg Quint.